Welcome back. So this is lesson 4 and we are going to look at the entry models, what to do when price gets to your marked level. So either your swing low or swing high as liquidity or your fair value gaps. All right. We don't stay in the 30-minute to take entries. We move down to the 3-minute to look for entries because price arriving at your level is not a trade. That's not when to act. You have to go down to the lower time frames to get more precise entries for better risk to reward. The trigger, either way, is a 3-minute rejection. First of all, price trades to the level. Then the candles on the 3-minute will show some form of a rejection. It could be wicks, the candlestick pattern, an engulfing candle, that kind of rejection. Or what I teach is when you have a change in the state of delivery or a change of character. So for example, you're looking for a bullish move. You're just waiting to have price close above the recent high on the 3-minute. That is simply the change in the state. If you're bearish, you're just waiting on the 3-minute for price to close below a recent low in your direction for you to get that confirmation. So that is simply the confirmation. No matter how good it looks, if you don't have a close, there's no trade. The first entry is a trend confirmation. It is literally my favorite entry model. The continuation is basically following the trend. You're literally confirming the trend after the last break of structure on the 30-minute. All you're waiting for is a pullback to your specific liquidity levels. You go down to the lower time frames to look for more confirmation in the form of a 3-minute rejection to continue price in the direction of the trend. Now let's jump into the chart and see an example of a continuation trade. All right, so we're going to look at an example of continuation. Let's use the replay tool. I'm using this example because it shows previous 2 days, it shows us some signs of a bearish move. Okay, so now I'm going to mark the levels out right with you. So we're going to see a break of structure right here. I'm going to mark this out. Let's mark another break of structure. I see another break right here. Okay, and I also see another break right here. So this is a new day, right? New day. I see this as a liquidity sweep. Let me mark this out as a liquidity sweep. Now, if you're following, you would understand. If you're watching the previous videos, you understand why this is happening. We've probably looked at this example in the past as well. So this is a 30-minute gap. What do you see? We took our liquidity, tap into this, and we're bouncing to the downside. All right. So already this is good confirmation that we're bearish. Okay. Now I'm looking for price to create some kind of structure. All right. So I'm looking at this leg here. All right, so I'm going to put a line on the 9:30 a.m. open. All right, so let's play price. This is pretty much enough price action for me to kind of begin to mark out my levels. Okay, so what am I seeing here? I am seeing that there is a fair value gap, a 30-minute fair value gap here. The price has really struggled. Regardless, I'm going to mark out my levels. This here is a liquidity level. If you've been following, this is a liquidity level. This is the last swing. Oops, this is the last swing before the break of this low. All right, so I do consider this as a liquidity level. Secondly, all right, so let me mark this here as my break. And what else do we see? The only thing I'm seeing here is this 30-minute fair value gap. I do see another 30-minute. I don't know if this candle is done, but this is a 30-minute fair value gap. All right, so we're looking for a continuation move. Okay, let's mark this as a 30-minute fair value gap. So we're going to go down to the 3-minute because the market is almost open. Play this, pause. Okay, all right, so let's see the 30-minute. Let's see how it's looking in the 30. Okay, nice. So this is a 30-minute gap right there. So that's a liquidity level, and then we have this level up here, which is the last swing as liquidity. So on the 3-minute, I'm just looking for what price does here or what price does here. Okay, so as I said, when price taps into your level, you want to see a break. In this case, we want to see a break of a last swing low in order for us to get our entry. So I'm going to take this line off and we're going to wait to see what happens when price enters the level. Boom, we enter the level immediately. Now, what will make me enter this? First of all, I'm looking at this low, right, as a low that will confirm that we're going to continue going down. I just marked it there just for reference. So what do we do? Is this candle close? So if this candle closes like this, right, this is your confirmation. We've closed below the low, and that would be my sign to enter, right? Stop school above here, and then we do a 1:2. Pretty simple, right? Let's see how this plays out. First of all, we need to make sure this candle closes. So wherever the candle closes is wherever we're taking our entry. So it doesn't close there. Oh, okay. It closed right here. So huge stop loss. But it doesn't matter because why? We're trading mechanically, okay? And ideally, this is where our stop loss. This is where the trade idea is invalidated, okay? So imagine we're taking our entry here. We're doing that 1:2. Let's move this down a little bit. Okay, so that's a 1:2. Now let's play price. So yes, we move, and yeah, it takes a while, but it plays around, plays around, but that works out. Okay, that works out. That's typical Nasdaq. Nasdaq will play around with you before giving you your money. But I marked the levels out. You guys saw the 30-minute level. You also saw the last swing. So in this case, the market opened and reacted from the 30-minute fair value gap, right? 30-minute fair value gap, and on the 3-minute, you can tell that after reacting from there, we closed below this low, and that gave us the entry. I don't know if this would have gone to 1:3. That would have been like 300 points. That would have been crazy. But let's see if the market went to 1:3. Yes, it did. So as you can see, the continuation trades, they do play out, right? Once you are in the right direction of the market, you're literally most likely going to get your 1:2 or your 1:3. So that is it for the continuation model. We wait for the tap in, your liquidity level, in this case, the 30-minute, wait for the closure. We got the closure, we took it mechanically, price above there, boom, 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 take profit. Aside the continuation, there are cases where you would have price disrespecting certain levels. So for example, you're bullish, you have a low or a fair value gap that you want price to react from. Price gets into that level and does not react in the opposite direction. It continues to rip against your bias. Now here's how to trade it. First of all, you have to confirm that indeed the levels are being disrespected. Secondly, you have to acknowledge that the initial bias is failing. Now, how do you enter? You would notice that after these levels fail, you start to see structure form against you. The entry comes from a rejection. You're waiting for a price to tap into a fair value gap, a 3-minute fair value gap, and reject out of it. Now, that rejection should be followed by a break of structure in the direction of the opposing move. We're going to look at it on the chart, so don't get confused. So if we're bullish and price starts to give you bearish structure after breaking your levels, then you're looking for a bearish entry. So the bearish entry is basically you wait for the 3-minute fair value gap to form, just wait for price to tap into that fair value gap and then close below the last 3-minute low, and that break would give you your entry. In the bearish scenario, your stops will have to sit above the 3-minute structure, and then you target a 1:2 or even a 1:1. I see bias flip trades as counter trend trades, so I don't want to stay in these kind of trades for too long, so I cap these trades at 1:2. All right, so let's look at an example of the bias flip on the charts. All right, so on the 30-minute, I'm going to start from the 30 minutes as we have learned all this while. I look back the last 2 days. What do I see? I do see that we're breaking highs. We keep breaking highs, breaking highs, breaking highs. So as I've annotated this already for you guys, so it's easy for you to see. Right, we keep breaking highs, we keep breaking highs, we keep breaking highs, we keep breaking highs. Okay, so you can see break of structure, break of structure. Now, this is a day, you can tell, like just by eyeballing it, you can tell that we didn't continue to break structure on this day. We went in the opposite direction. Now, let me just help you identify the bias flip. So on the charts, if you came into this day, you'll be looking at this particular low as your liquidity levels. I've already taught you the liquidity levels, the fair value gaps, and the last low that leads to the break of structure. Okay, so in this case, this is it. I don't see any fair value gap in this area that I'll be interested in. So this is literally the only level that you'll be interested in. So you're expecting price to sweep this level, right? And then continue pushing. So let's look at what happened. I'm going to go down to the lower time frames so we can play this and see how price reacted. Now, this is the level. As I said, we're expecting price to sweep this level and then turn around. Now, what happens? It breaks the level. So at this point, you can tell that I put this green line here just to indicate this is the change of character you're looking for. So if this price closes above this, that's when you're anticipating that, hey, you're going to continue going up. Okay, this is just a textbook example so that you can understand what is going on. We wake into that area, right? And if you understand what I mentioned, that the last swing before the break is a liquidity level, you understand why it was just a tap in, it wasn't a close above. Okay, do we break above the green line? No. So what do? We continue to create structure against the move. We continue to create structure against the original move. All right, so let me mark this as a break of structure right here. Now, if you look closely, what do you guys see? I see a fair value gap, right? This is a 3-minute fair value gap that has been left along the way. The candle hasn't closed. Okay, so here, this is the gap here. Now, the model tells you that, okay, we didn't get this flip Okay, after sweeping this level, we didn't get this flip. What did we get? We started to see a move against us. All right, so now the bias has flipped. Now the question is, how do we enter this move? It's pretty simple. Wait for price to tap into a closest FEG, followed by a break of structure. That is your entry. Let's play price. Candle plays around. Take note, I've left this line here. We don't close above this line. All right, this is what is going to tell us that, okay, so we're ready to move up. So keep monitoring what happens. We do tap into this 3-minute gap anyway, and we have an immediate rejection, right? We reject that gap, okay? So keep playing price. We don't close below the low right here. I use the bodies of the candles for my break, so take note. All right, so this candle is closed, okay? So this candle closed below this price. This didn't quite close, but this one confidently closed. You can even tell that it closed below the wicks. That's even more confirmation for you. Now, as soon as you get that confirmation, your entry goes there, okay? Entry goes right there, and your stops go above the developing structure. In my case, if you're looking at this, right, the best place to put your stop loss to be proven wrong, right, is above this green line, or it's above this swing high right here, right? Put your stop loss where the trade idea just simply proves you wrong. So ideally, I mentioned that once price closed above this green line, we might be ready to go up, and that is what proves this idea wrong. Okay, so that's why the stops are up here. The price, what does price do? Let me just play this. It plays games, retraces, and it gradually crawls down, right? And that is take profit. Okay, so yeah, sometimes you would have a bullish bias. You would have an extremely bullish bias. However, the levels that you've marked on the 30 minutes would fail, and that would be your indication that price is looking to head low, at least short term. Okay, so that is an example of the bias flip. So that is it for this video. We looked at the two examples. We looked at the trend continuation, and we looked at the bias flip as well. Takeaway from this video is the level is not where you have to like immediately act. You just have to sit and watch what happens at these levels. Wait for a 3-minute rejection and a close before you take your trade. Whether you're trying to continue with a trend or you're trying to flip your bias against it. I'll see you in the next video.